Well, the Nigerian stock market was in positive territory at intraday. Let's bring in Temple Ashaju for more details. Hello, Temple. Good afternoon.
Good afternoon.
Now, has the exit of foreign portfolio, tapered?
Well, it's hard to say if it's actually tapering now, but we know that currently the market is still in the positive territory, and that looks like the kind of position we will be ending today, the market, because it's been like that since the market opened at 9:30 a.m. local time. And of course, we've seen interest across the banking and the consumer, the banking names, and of course the consumer goods segments of the market. We know that basically, usually when in a lot of markets you see opposition, winning a general election, that kind of brings about a kind of knee-jerk reaction from a lot of foreign portfolio investors and even local investors. This was the case in 2015 when the incumbent administration or the incumbent president and candidate of the party that eventually won this election, had in this market. I remember then we had an 8% plus gain in the market. That was the kind of surge that we saw. So I think a lot of foreign portfolio investors kind of envisaged that this time as well. Unfortunately, that didn't pan out, in line with their expectation. So what we have right now is more of policy stability, because again, we already know the policy direction of this current administration, and that's why you have this kind of reaction that you had yesterday, 2 days ago, and the day before the panning out in the market, where you saw a lot of sell down. So, but that didn't mean that they actually left the Nigerian market. They actually just rebalanced their portfolio, divested, and went to the debt market. However, the gap that these foreign portfolio investors have left in the market within the last 2 trading sessions have actually given room for re-entry in the market. And that's the reason for the current interest in the likes of Wema Bank, FCMB, Zenith Bank, which has also boosted the performance of the banking sector at this point. The same thing is what we're seeing in the consumer goods segment of the market, where the likes of Nestle have gained 2% plus. Dangote Flour is also rising about 5% in early trades. That's the kind of sentiment that we saw, Edidion.
So how is the trading day going at this time?
It's still really positive. It looks like that's the market will possibly close in green with what we are saying right now. There hasn't been any major negative shift in the market. Investors have been coming back into the market to take position in a lot of companies with fundamentals, companies that they are so certain will be able to declare dividends no matter how terrible the economic situation might be by way of impact on their earnings for the year 2018, calendar year 2018, which they're expecting in the market. The earnings will start coming in any moment from now, more, compared to what we've seen this week, because of course the national elections are over, except for the state election, which is just a week away. So going forward next week, we expect a lot of traders here, analysts, and of course market observers generally expect to see a week of earnings where a lot of the numbers will be more released. What we've seen for the greater part of last week was a closed period, board meetings announced to the market. And of course, a lot of investors have taken position between that period. Some have actually seen a bit of capital appreciation and reduced their holdings, while a lot others have actually increased their holdings. So this is the trend we've been seeing. By the time we start seeing more earnings trickling in from March this month that we've taken, we're very, very certain that the all-share index of the market, which is a key benchmark indices, will shoot higher again and possibly cross the 32,000 psychological line, which it had been for the greater part of February. And of course, generally, we'll see the basic fundamentals of the market that has been driving the performance of the market returning to the market, and a lot of traders and analysts also reacting to that, Edidion.
Well, thank you. Thank you very much. And for a wrap-up of the market in South Africa, here's our business correspondent, Natasha Piri.
Stats SA reports revealed that the country had 38 more liquidations in January 2019 as compared to the previous year. Voluntary liquidations increased by 32 cases and compulsory liquidations increased by 6 cases during this period. There was a decrease of 7.5% in 3 months ended January 2019 compared with the 3 months ended January 2018. The tourism sector also recorded a decline in the accommodation industry, recording a 1.2% decline in May 2018 as opposed to May 2017. The rand got off on a firmer note on Monday below the 14 rand mark against the US dollar in early trade. 15 rand 78 to the euro and 18 rand 15 cents against the pound. Experts believe that this is due to the prospects of a trade deal between economic superpowers, China and the United States. In corporate news, it's been announced that Group Executive Committee member of oil giant Sasol, Stefan Schoeman, will be resigning. The oil company recorded a jump in first half profits, resulting in headline earnings per share increasing by 32% to 23.25 rand. Schoeman joined Sasol in 1989 and has held various management positions in the company. Meanwhile, Global Internet and Entertainment Group Naspers has spun off pay television units MultiChoice at a value of 42 billion rand. The company, which broadcasts to 14 million households in 50 African countries, has left by 15% on its introduction to the market, landing it into the top 40 firms on the JSE. Moving to Zimbabwe, their currency, the baud notes or the real-time gross settlement, got up to a shaky start this week as the country's banks started trading the currency. To add fuel to the fire, South African banks are holding back the dollar supply amidst being fined by the United States Office of Foreign Assets Control. The latest bank to cut ties with them is First National Bank, which gave Zimbabwe a notice in December 2018 that it will no longer be supplying money to the financially constrained country. From Johannesburg, South Africa, Natasha Piri, Channels Television News.
Our gold prices hit a 2-week low on Friday as upbeat U.S. economic data boosted the dollar, while mounting concerns over a slowdown in global growth offered support to safe haven metal. Spot gold was up 0.17% higher at $1,313.47 per ounce after slipping to its lowest since February 15th. U.S. gold futures were down 0.1% at $1,314.80 per ounce. Among other precious metals, palladium gained 0.3% to $1,548.27 per ounce, while platinum was up 0.3% at $872.16 per ounce. Spot silver was flat at $15.60 per ounce. Well, that's it on the program. Thank you for watching. I'm Edidiong Iwang.